Hey there, ladies and gents, welcome back to the vlog. My name is Drew, and welcome back to Startup Saturday and Basic Business Skills, episode number 2. And that's a lot of introduction that I just did there. So, this is the second episode, as I mentioned, in the Basic Business Skills section or sub-series that I'm creating here. And the whole idea behind these videos is to show you guys that you don't need a CPA or you don't need an MBA in order to run a successful business. In fact, the skills that you need to run a business are pretty basic, hence why we're making this video. And if you didn't see episode 1 was all about incorporating your business and getting legit with the state and the federal government, so definitely go check that out because I'm going to be springboarding off of that. And today we're going to be talking about how you record profits and how you record expenses. And again, getting into basic business accounting, which is tracking expenses and stuff like that, and profits, again, you might think it's a little bit scary at first, but I promise you it's not as bad as you think. Basically, at the end of the day, there's one equation that I want you guys to remember, and this is an equation that any accountant will tell you. It's conveniently called the accounting equation, and it has a bunch of different iterations. There's ones for owner's equity and stuff like that. Basically, you swap different variables out, but at the end of the day, for just basic business practice, I want you to remember that profit is equal to revenue minus cost. Now, a lot of people think that when you make a sale, that is direct profit. It's not. When you make a sale, that is revenue, but you have to remember that there's also cost that is involved in making that product and selling it, so you have to account for that before you can get your true profit number. So profit is what you have left over after you sell something and you account for the cost that it costs to make it, basically. So an example would be if I make $10 worth of cookies and it costs me $7 to get all the ingredients and bake everything, then I made $3 profit on that $10 revenue after the $7 cost. So see how that works? That's all you need to know for basic business accounting, at least when you're getting started. So, how do you account for profit? How do you account for revenue? How do you account for cost? Well, that's a very good question, and that's where we get a little bit more into the weeds. So first, let's talk about some of the costs that you might incur when you start a business. They're conveniently actually called startup costs. So when you're starting a business, you have a lot of overhead to account for. If you're in a products or a goods market, you have to consider all of the raw goods that it takes to make that good. I was talking about cookies earlier. You need to buy flour and sugar and all that good stuff. Chances are you're probably working out of your home, so you can just account for the electricity that it costs to run your oven or the gas that it costs to run your oven. You don't really need to incur a huge restaurant or professional kitchen quite yet if you're in that state, but needless to say, you have little expenses here and there. And chances are, if you're just starting your business, you probably don't have any revenue or profit yet. That's fine, because what you can do is you can use your personal funds and purchase those items, and then you are able to deduct those expenses on your individual taxes at the end of the year. That's what you call a business expense. And so on the personal level, when you're recording business expenses out of your own pocket, there's a couple different things you got to do. So first and foremost, I would definitely recommend downloading an app like Wave. Wave is the one that I use, and they're not sponsoring this video or anything like that. I just like their platform. But Wave is a financial services platform, and they have a bunch of different services that help small businesses do their accounting. But one of my favorite apps that they make is called Wave Receipts. And what's really cool about Wave Receipts is it's a camera-driven app, so you can take your camera, take a picture of a receipt, and through OCR, optical character recognition, it analyzes your receipt, it gets the cost and everything like that, and then you can categorize it, and then it posts to Wave's cloud, and there's nice little reports that you can run. And at the end of the year, when it comes to tax time, you have a nice report where you can have all of your deductions and you can write those off on your taxes. And it varies from state to state. Obviously, check with your local CPA or your local attorney or somebody who's in the know about the accounting laws in your state and your area. But most of the time, when it comes to business expenses, you can write those off on your federal income statement. There's a separate form, I can't remember the title number, but when you're filling out your W-2 and your 1099, just make sure you file a different form for all of your expenses for your business, and then it'll ask you for your EIN number, I believe, and the name of the business, and that gets filed with your income taxes. So that's how you do it, basically. And one thing to keep in mind is that the IRS does keep a 2-year rotating clock. So if you file your taxes this year in 2019, they have until 2021 to come back and audit you. So there's something fishy. Again, they don't quite understand how one thing is accounted for. They can come back as late as 2 years later. So you definitely want to keep records at least 2 or 3 years in the past. And as long as you're keeping digital receipts, you might as well keep physical receipts as well. This is always a good idea. To have redundance, and you want to make sure that your digital receipts match your physical receipts. So if there's a physical receipt that you have but it's not digital or vice versa, you want to fix that discrepancy so that there's consistency across everything. And in that way, you can make sure that you're safe. So if for whatever reason tragedy strikes and there's a fire at your house or something and all of your receipts get burned up, you have a digital copy. Or if just one day Wave servers, this is very unlikely, but Wave servers are down and overloaded and you can't get to your payment cloud, and that happens to be the day that the IRS comes and audits you, then you have your paper receipts and you can go backtrack that way too. So that's how you keep track of startup expenses. That's one of the biggest costs that you'll incur when you're first starting your business. Some things that you can deduct, obviously goods that you buy. So if you are manufacturing a product, the ingredients that are required to do it. If you're in the software sphere, you can write off hosting, you can write off, if you buy a computer and you use it for business, let's say you use it for 70% business and 30% personal, then you can write off 70% of the cost. That is a thing too. If you're not using an item purely for business, but you only use it part of the time for business, then you can write off a percentage of the cost actually. So that's legal as well. Of course, this is all based on my personal experience and what I do, but of course you want to check with your local CPA and they can give you some more guidance. But yeah, those are some of the initial costs that you'll make. And then when it comes to revenue, there's a couple different ways that you can track that as well. If you are in a service industry, so that is to say that you are creating, or if you do like a service like lawn care and stuff like that, chances are you're going to be doing invoicing. And what invoicing is basically you create a document that outlines all of the costs and then you pass that on to your customer as a bill of sale or receipt, and then they pay you the amount on the invoice. Now, Wave has another app for that called Wave Invoices, and you can build invoices within the app and then you can send them to your different customers and things like that. And if you're doing something like e-commerce or you're selling a product online or in person, then there's also inventory management services that can do that for you as well. Specifically, if you're in the food section, I'm going to give a shameless plug for Food for Group, because Food for Group Farmers Market is the best way. I know that because I made it. I'm just kidding. I'm personally biased, but we've built a very robust system for any of you guys who are in food sales or you sell cookies, salsa, whatever it is, ingredients, or if you're a farm or you're selling your produce to somebody, then Farmers Market, Food for Group Farmers Market, is a 24/7 digital farmers market, and it's totally free for you guys to use and to sell on. So definitely check that out at foodforgroup.com. So, shameless plug over. But within that, you have invoices and you can send them to your customers. And with Food for Group, we just send your customer an email with a receipt and invoice. So we do all that for you. So there are some platforms that do it for you. In fact, every platform that's worth their salt should. And I know Food for Group does because I've written the code for it to actually do that. So yeah. So keeping track of proper invoices, keeping track of your profit channels is just as important as keeping track of your expenses. But as long as you keep both of these things in balance, so you have a process or a control to document all of your profits and a process or a control to document all of your expenses, then chances are at the end of the year you're going to come out with everything on the up and up. Your books are going to be clean and squeaky and nothing to worry about. As long as you are cognizant of both systems, profit and expense, then chances are you're going to be on the up and up and you can do all the basic business accounting that's needed to start your small business. And by the time you scale out and you have corporate funds and funds within the business that you're taking from, then you can consult a CPA or an attorney or somebody who's familiar with the laws in the area as to how to do the accounting for all of that. But at the end of the day, when you're just getting started up, just remember that profit is equal to revenue minus cost. And you should definitely have a way to account for all of your business expenses and costs, and you should definitely have a way to account for invoicing and all of your profits and seeing where your money is coming from. So I hope you guys enjoyed this video. If you did, leave a like. If you didn't, leave a dislike. I learned just as much from the dislikes as I do from the likes. And if you want to continue the conversation, leave a comment down below. And we'll wrap up today's video in the normal way, and that is by me saying, always remember, friends, that you are wanted, you are loved, and you are appreciated. You have a special talent that nobody else has, and the world is waiting on you to bring it out. So muster a little courage, go out into the world, and change it. I had something in my breath there, sorry. And change it. That's what the world's waiting on, you.